Welcome to The Real Money Show. The number 18778 Silver. The website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and it has been a crazy week in precious metals. Markets are doing very, very well. We're going to talk about what could be behind the new increases in gold and silver. Gold $10 away from landing at another all-time high. Jerry, we want to get into the Buffett indicator. We want to talk about gold and the bond market. But first, something that broke, that Vince Lanci broke I think this morning even. And what he was talking about is, as many people know, and in some cases prevent people from getting involved in the gold and silver market, is the idea and concept of manipulation. Mm-hmm. Now, all markets are controlled at this point, which is why there's all these distortions.
Agreed.
Vince Lanci points out that there have been articles coming across in recent months that are reversing the manipulation narrative to say that it's China manipulating the market, or that that there are negative manipulators in the market. These writers are associated with bullion banks. That's right. The people who have been manipulating the market, if you believe in those type of things.
Right.
So now we have them screaming manipulation. Why? Because what we're finding out, and this is brand new news, we're going to have to keep looking into it, is that back in October, there was a very, very large firm in China through the Shanghai exchanges, through their gold exchanges, that was going long in the gold market and taking delivery. And the bullion bank who was taking the other side of the trade, who was short the market, was none other than JP Morgan.
There you go.
Now, as they say, the rising tide lifts all ships. The concept is true on the other side. If JP Morgan falls, all the bullion banks fall. So as of December, we started to see the Bank of International Settlements step in to try to, let's say, tamp down the market. Do you remember back in December when gold broke $2,000 an ounce, and it kind of stood there, and it didn't keep going up, but it really wanted to go higher, and it didn't. Mm-hmm. That was the work of Bank of International Settlements, according to Vince Lanci.
Who are the central bank of all central banks.
That's right. So they stood by to defend against the losses that JP Morgan was taking on, and the physical product was going east. Mm-hmm. This is what would amount to a new pseudo Hunt Brothers, except that while they were vilified, this is a vilification of the system that's been manipulating gold and silver. So this is a very interesting news, and it also maps onto the concept of the BRICS accumulation of precious metals.
Yes.
And so over the years, for our listeners, as you know, we've been reporting on all of the central banks that have been accumulating, and we've said, look, the price of the metals will probably stay, they won't ratchet up until all of the accumulation is done. We're rearranging the chairs on the Titanic. Mm-hmm. The music will stop, and it looks like we're getting very, very close.
You have to set the foundation.
The stocks are almost piled up.
Yeah.
That's where we are. They are now, just like the BRICS, are emboldened to take on the financial systems and the systems of systems. It appears that there are banking interests in China that are also willing to take on precious metals.
Yes.
Now, for our listeners going forward, that means prices could go crazy.
Yeah.
Take that into account when we start talking about the bond market and perhaps even a gold bond, which could be is being discussed. So that's what's going on. That's breaking. Also breaking from Vince Lanci, by the way, this week was the BRICS are going to a gold standard.
Mm-hmm. That's conclusive.
Conclusive. The unit we know is going to be 40% backed. The BRICS want a gold standard.
So exciting. There's more news coming out every day.
I will get to a quote on that in a few moments. But first, I wanted to get your reaction to this news?
This news has been swirling around, and it really points out to the interconnectivity of everything happening, from the movements from the BRICS to the Shanghai Gold Exchange that was launched almost a decade ago. How, yes, the Shanghai Gold Exchange taking a long position and also forcing and taking delivery. On the other side, the notorious JP Morgan. And the JP Morgan, they're using bank shorts. They're shorting using, quote unquote, what they are, derivatives. And just last week, we discussed the FDIC, the Federal Deposit Insurance Corporation, no longer hiding JP Morgan, putting them in their center stage along with the four other banks, highlighting the amounts of toxic derivatives that are on these banks' balance sheet. Many of these derivatives, Jeremy, are being used to try to tamper the price of physical gold and silver, which cannot be done because the movement of the physical is, yes, it's moving from west to east very rapidly. And our very own Bank of Canada and the Canadian government is helping in that exporting of gold. Gold Telegraph reported this week that Canada's gold exports to China continue to skyrocket. In 2020, our exports to China amounted to 189 million. In 2023, that has quadrupled to almost $500 million in gold exports. Thank the gold mining industry here in Canada. We have one major driving force in the economy, and that's gold.
Well, it opens up an interesting conversation. Listen to what Vince Lancy was talking about with the BRICS. Quote, the BRICS are definitely going on a gold standard. For the West, this means one thing. If Western nations want to trade with BRICS for certain goods, it needs more gold. If the West does not wish to trade with the BRICS for those items, then they must, number one, onshore, friendshore, that's number two. Number three, reshore their supply chains sufficiently in natural resources otherwise provided by the BRICS to obviate the need for both the BRICS resources, right? So basically, you got to pay to play. Mm-hmm. You got to be using what they want to use, and what they're saying is, we don't want your currency, we want your gold. So that would be good for Canada. We are a very large mining nation. We number 4th in the world, I believe. Definitely in the top 10. And we can do that. We can absolutely do that. At the same time, you sit there and you go, you're thinking, well,
not this
over
government.
Over the years, JP Morgan has been our enemy. We have wanted the manipulation to end. But then they almost become the defenders of the American freedom and the banking system, but we don't want their banking system. So I feel caught between where my loyalties should lie. I want the freedom of the market. Is it enough to have the freedom of the market to fix the banking systems? I know. John Forrest Little, for instance, would say silver will fix everything. We've seen how gold has responded in Zimbabwe. Gold can fix everything. Mm-hmm. What do you think about when you hear all of this type of news?
It just reminds me how it's a testament of seeing how the nations in Africa they're now emboldened now to launch their own gold standard openly without any recourse, and that's what's going on. There is a seismic shift happening all across the continent of Africa, empowering these nations which were once used and abused for resources, blessed and cursed with all of the minerals and all of the resources, now putting them in the position to now being sovereign over their own. And this is the trend, Jeremy. We're just following these trends, and now Uganda is planning domestic gold purchases, shoring up to build foreign exchange reserves, the foundation, and to limit risks on reserve investments. This trend is very real.
Now, on this trend, if people want to get involved in the trend, they want to be a part of the gold market, is paper the way to go? The banks are going to say ETFs, certificates, all sorts of things. What is the best way for people to get involved in the physical market? Is buying physical really that burdensome, or should they be looking for the ease of liquidity that they would get with paper?
Actually, you get a bit of both with physical precious metals. The whole unique thing why the reserves are in physical precious metals, not in paper, following this trend. The trend is not towards paper, clearly because paper can be manipulated, can be overbought or overcreated. You cannot create a finite element like gold and silver that has been renowned as money throughout the ages. And the unique ability for it to be liquid at the same time, a financial asset that is decoupled from the old guard, the old financial system that is in tatters, that is being destroyed, that is being left apart and left aside. And unfortunately, right now, Canada and Canadians are on the outside, sadly, looking in. You know, we don't have any gold reserves in Canada, but Canadians can do this. We can do this in your own registered plans. You can do it for your family. You can have an asset outside of the financial system. And that's what we do here at Guildhall. If you cannot hold it, you do not own it. You want ownership of and control of your financial wealth, your financial stability, and financial freedom.
Real is rare, right? And ultimately, physical gold is something, and silver is something that is sheltering nations from economic instability and the things that are coming forward. It guards against inflation. It guards against the devaluation of currencies. And gold has ratcheted higher, rocked higher. We know that this is a trend that's only going to continue. We're still at the very early stages of this. This is not anywhere near bubble territory. And so even though it's going to be reaching all-time highs, it's still very nascent in terms of the bull market. So if you want to get involved, you can give us a call at 1-877-8-SILVER, the website, guildhallwealth.com. Buy it direct, take it home. It's a great way to go, part of the crawl, walk, run strategy. Consider holding it in a vault facility for ease of liquidity, for storage, insurance, security. Maybe you want to travel. Maybe you want to move somewhere. You know that you have access to the ability to sell on a phone call and have those funds sent to you. Or put it into your registered account, your retirement. What better way to protect your wealth for retirement than gold and silver, an asset that are up 500% in the last 20 years. These are immense numbers, and people are always very surprised to find out how the lack of volatility in gold. They think it's volatile. It's only had 2 down years in the last 15 years. Give us a call. We'll show you all of the numbers. You'll be able to make the decisions for yourself. Again, 1-877-8-SILVER, the website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER, the website, guildhallwealth.com. It's amazing how the summer feels quiet. We're relaxing. We're trying to enjoy the sun and get out all our activities in. And, you know, we still see all of the news of the day, and we try to maybe insulate ourselves from it for a little while and just enjoy ourselves. I've been particularly surprised at what's been happening in the gold and silver market. Maybe not necessarily on the surface level, although prices have continued to rise and it's been a spectacular year, but it's all these other things going on beneath the surface. Yeah. So, you know, there's all sorts of news happening. People are, you know, interested in the politics of the day, and it's an election year and all of this stuff. But the big moving swell of the changes to our financial world is massive. And, you know, I feel like with all of the research we do week in, week out, and seeing how the BRICS literally blocking up, stacking one by one all of this information, that I feel like many people are not seeing the full picture of how their financial world is changing rapidly. Mm-hmm. The BRICS are coming on.
Yeah.
They're going to back by gold. And at the same time, the West is going to have to figure out how to deal with it. And they don't want to be, there's going to be a saving face probably to this. How is the world going to have this equity, which will lead to prosperity? Gold will lead to prosperity.
Yeah.
I think you and I both agree that once gold and silver come back into the financial fold, they will prevent the money printing the way it's been going on. They will prevent the debts that have been going on. They bring discipline back to the system, the type of discipline that forefathers knew were required for successful and prosperous nations. So when you think about all of that, what do you think about the news that gold is now outperforming the bond market?
This is just an indication of the seismic shifts we talked about in the last episode. The financial foundations are rumbling, and this is a massive financial foundation. And what we do here at Guildhall, we follow trends, and this was a 50-year trend ever since the suspension of the 1971 gold standard that was suspended. Which, by the way, John Forrest Little calls a default.
It was a default, actually. I believe that. It was when, they transitioned to purely debt and greed. This type of debt-based currency system. It allowed the central bankers to control debt and interest rates, creating a financial environment totally reliant on the government's ability to support the currency through debt creation. But the debts now matter. We are approaching territories that we have never seen, astronomical territories. The derivatives market, everything is cracking at the seams.
So I just want to digress for a moment. Do you think that inflation could get worse before it gets better?
Of course, yeah, I do see that, and I think we'll have to before. It will have to get much worse before the gold standard topic and the idea, which is right now in the mainstream, very hated. It's still being very, a lot of the naysayers saying it's, how are we going to prevent further, issues in the market if we can't just print the money? Well, there are solutions around that. You could have a gold revaluation account like Holland. And the new cycle that we're seeing, it's just tailwinds for us, Jeremy. We're following the gold and silver prices. We're following the technicals, and everything looks sound. And we have to follow these news pieces to understand, we're on the right side of history here once again. Yeah, another alert is flashing before our eyes.
Well, wait, before we get there, let's keep talking about the bond. So why is it that gold is outperforming all of a sudden?
Well, experts have noticed that the returns on gold have now surpassed those on bonds for the first time in 50 years. Because the recent developments indicate in the debt market that this long-standing approach to modern monetary theory of just printing money ad nauseum is no longer sustainable. This is a profound indicator of changing investment trends. As gold traditionally does not pay interest, is what we're being told. It doesn't pay interest. What do I want gold for? The structural bear market in bonds now suggest a negative outlook for various financial assets, including stocks, ETFs, mutual funds, and retirement accounts tied to bonds.
So it sounds to me that as we talk about the Exter's pyramid with gold and silver at the point, which is on the bottom, it's an inverted pyramid, that at this point the pyramid is wobbling, and that now we know that it's a tenuous situation. They're looking for ways to protect wealth. And as central banks are buying and BRIC nations are buying and pushing the prices of gold higher, it's becoming more attractive.
Yeah, the old tools that were once used are no longer effective. This is the bond market we're talking about, the traditional safe haven. Once considered safe are now at risk. And the structural bear market in bonds implies that the money created from bonds that supports the economy is in jeopardy. That is the problem. Now, there is a massive call for a sound money strategy. Financial experts today are advocating for a sound money strategy. This approach involves, and this is the key here, diversifying portfolios, your money, with tangible assets such as gold and silver, which are seen as reliable stores of value. Unlike tangible assets like financials and stocks and ETFs, tangible assets are not dependent on the value of the underlying currency. It provides a hedge against financial instability. So this is it. This is the 453-year pattern shift, and it's making a turning point in the economic history. The old tools that central banks once relied on to maintain stability and to be the solution, they're no longer effective. It's beginning it's an uncertain chapter in global finance, but what is certain is that anytime there is a financial reset, it's clear. We all gravitate, all roads lead to gold and sound money strategies. And what we can do, adopt sound money strategies for yourself and build networks such as these. And the message is clear. This trend has been broken. Now is the time to act.
And this also falls in line with what we spoke about a few weeks ago with Judy Shelton's new book, and she talks about floating a gold bond, a very long-term gold bond, which would employ trust into the system, and that if it became too popular and you have to get more gold, you have to increase the price of gold. So imagine that. You know that you have an incentive
To hold the bond.
to hold the bond so that it matches the price of gold. More people want to hold it, which pushes the price of gold up.
There you go.
You've got
That's a solution.
It's a great solution.
It's a real peg.
In the meantime, people have to start understanding that real is rare and that real assets are going to perform and have stood the test of time.
Right.
So the number 18778 silver, the website guildhallwealth.com. If you want to hold physical precious metals in a registered account, like your TFSA, or maybe you have a pension, a LIRA, or a locked-in RSP, and you don't know what to do with it, I encourage you to look at the performance of gold and silver and consider the factors that we're discussing, and take the first important step to contact us and learn more about holding actual physical gold and silver in a vault facility outside the financial system, but still within your pension plan, still within your retirement account. It's been so effective for so many people, Jerry. It's such a pleasure to see the gains that people have made over the years and that they don't have to do anything. Mm-hmm. It's a set it and forget it, just like GICs, just like bonds. You set it, you forget it, and markets just continued higher and higher. Now, at the same time, by the way, that's guildhallwealth.com. Give us a call.
Don't forget that.
Don't forget that. At the same time, we're seeing stocks, the stock market, the financial market, separate from reality of the actual economy. And now we have an indicator that says not all is well.
Mm-hmm. This is an important indicator that gives us an idea. Hey, if I'm going to put my money here, is it overvalued? Is it overpriced? Should I buy this right now, or should I buy the undervalued precious metals? One of the most important and one of the most famous indicators is the Warren Buffett indicator. What it is, it's known as the market cap to GDP ratio. It's a measure of the total market capitalization of all publicly traded stocks in a country and dividing it by the country's GDP. It's used to assess whether a stock market is overvalued or not versus the economy. When that ratio, when that percentage goes over 100%, it may indicate it's in overvalued territory or a bubble. So just in this week, the Warren Buffett indicator hits 195%, the highest level in history, surpassing the dot-com bubble, surpassing the global financial crisis, and it also surpasses the 2022 bear market. The alerts, the alarms are all sounding at the same time. Do what the money's doing. And Warren Buffett, sitting in a lot of cash. I wonder why. He knows what's coming down the pike. The time to act and the time to take the call is now, and to protect the portfolio away from these effects.
There was a video once put out by Buffett, and he talked about silver at length. It's posted, I think, somewhere on the Arcadia Economics. We should try to find it and put it up on ours. And he really liked silver, and he bought silver. And he clearly sold it too soon. A lot of people think he sold it as product to be put into the ETFs. And a lot of people also think that maybe he was encouraged to sell it and was given maybe an offer he couldn't refuse type of thing.
Yep, that's right.
Where basically it's like, hey, you've got a good thing going. We don't want you to touch the silver market. And there was a book out, a historical book about it, and it just said, he sold off at something like $8. He bought it at $3.50, sold it at $8. Massive amounts of money. Everything he does is huge. Yeah, Jerry, we've got just a couple moments left in this segment. Let's switch gears. Jim Rogers, famous investor, hedge fund guy. I think he started hedge funds with Soros, They're very different people. He wrote a book, Hot Commodities. I read the book. I thought it was great. Some really good takeaways in it. Over the years, we've watched you and I have both watched lots of videos with him. And he is very much a proponent of gold and silver, but he's always said the same thing. I like it. I own it. I'm not buying anything right now, but I will at the right price.
Yes. Yep, that's his famous spiel.
What's going on with Jim?
Well, at a time where gold's breaking record highs, covering, gold's hitting mid-24s very soon, Jim Rogers came out and said something very interesting, I thought. So Jim Rogers, that you mentioned, legendary investor, billionaire, bona fide international man, longtime friend of Doug Casey. He said something very interesting. He's like, I have some gold. I want to buy some more gold too. If I were buying one today, I would buy silver because silver's cheaper. So I think it's down about 40% from its all-time highs, about $50. Gold is near an all-time high, so I would prefer to buy silver now. I bought some silver yesterday, he said. I hope I'll buy some more if it goes down a bit. That's exactly who Jim Rogers is, isn't it?
Yeah,
if it drops, I own it, but if it drops, I'll buy some more.
Well, I love what he's saying. I feel it myself. Prices were rising today, and I was even commenting to some of our colleagues that, wow, I wish I had more gold. And I instantly thought, now is the time to buy silver. It's only trading in the 30s range, right? It's got so much more potential, and we know that BRICS nations are looking to acquire it too. So the trend is your friend. Consider owning physical precious metals. It is the direction that the future is taking of the monetary world. The number 18778 silver, the website guildhallwealth.com. Give us a call. We'll show you how to get involved in the market, and we look forward to meeting you. More to come in The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver, the website guildhallwealth.com. I think at this point, Jerry, there's successes. There's always successes in investing, and we are not the panacea. We know that gold and silver is not the end-all, be-all, that you can't have 100% of a portfolio in precious metals. We're not advisors. We look at the fact that gold and silver are assets. They're simply dependable and durable assets. They last a lifetime. They've been around forever. It's always been considered money. And we can see that not only world players are acquiring it, central banks are acquiring it, but everyday people are also acquiring it too. But there are limits. Once you move beyond 15%, which that's a great start, people will often move to maybe holding even more because that's their comfort level. But there are limits to how much you can possibly hold. So when we think about savings and loan crisis in 87 and the dot-com crisis and subprime crisis and wobbles in the stock market, concerns about housing in Canada, it's becoming difficult to be a landlord, I think, in Canada these days. There are other options available within the hard asset spectrum.
Mm-hmm. And amongst the spectrum, the ones that we focus on, it's very clear. Gold, silver, platinum, and natural fancy color diamonds. Over the course of the last 11 years, I have the opportunity of offering natural fancy color diamonds as a way to further diversify one's hard asset portfolio. Gold and silver are obviously there to protect against things like inflation and loss of purchasing power. And what I've noticed in the last few years, especially with higher inflation and higher interest rates, people are looking for safety, whether it be a GIC or whether it be seg funds exposure, high fees, and further, it doesn't account for what the rate of inflation is. The CPI inflation data came out today. It's cooling. It's down to 3%, whereas everything in the world is still up. Car insurance is at 19.5%. Transportation inflation, everything's up over almost double digits, Jeremy. We need a way to lock in the value of your wealth. All the work that you put in, all your successes, you lock it in and encapsulate into something very finite, very beautiful, and that will be a natural fancy color diamond.
Yeah, I think that
and
colored diamonds, they've never had volatility. Now they can plateau, they can maybe not go up crazy fast, but they've never had the volatility at all. I would say the one caveat would be in 2008, yellow diamonds fell in a V shape. They recovered very quickly, and I think that's because of all of the rare diamonds, they were the least rare, and so I think probably the lower quality of those got sold off to sustain holding on to better goods, and that's going to happen perhaps in a crisis. I think that we've moved well past that. I think dealers have moved past that. And it's really only been a straight line in the markets. But I think that colored diamonds have become undervalued over the last few years because they've had some headwinds. They've had the man-made market, which has blown itself up. Mm-hmm. It's destroyed the
trust in the...
Yeah, it's destroyed the reputation of those who even decided to sell them.
True.
Right? They took we can't beat them, let's join them, right? And it's, well, what are you going to be? Are you going to be a Tiffany's, or are you selling costume jewelry? What's it going to be? And now they're marketing it as, well, this is and my wife nailed this, by the way. She said, a colored diamond, something not a man-made diamond, something you buy for yourself. But if you're going to get engaged, he better be buying you something real.
Smart cookie.
Right? I agree with that. I think that and we talked about last week, the trend could go the other way. People will want smaller, more pure, natural things. So that's the man-made market. But I think the colored diamond market is such an undervalued, unwatched commodity right now. Real is rare. And at some point here, people are going to start to really discover the real. It's always been a best-kept secret. Mm-hmm. And now that is true more than ever before.
Yeah.
And I truly think that as markets turn and we see economies turn, the prices in the colored diamonds are going to go up very quickly.
Yes, with CPI data showing it's fueling the narrative that they're going to be cutting interest rates very soon, which only means an easing of monetary policies and potential printing press, helicopter money once again. This is a fundamental factor that supports natural fancy colored diamond prices. And I'm very excited to see how natural fancy colored diamonds have weathered the storm in the synthetic industry, divorcing itself almost from the colorless diamonds, the clear diamonds, and gravitating itself in this entire market towards a very trusted market in art. And this is a market that is time tested, and generational wealth did not protect their wealth with colorless stones or even stocks. They use land, things like hard assets, gold and silver, and natural fancy colored diamonds. What's on the crown? It's a natural fancy colored diamond.
Yeah, these special rare diamonds. You see these hero stones being sold at auction all the time, and being able to acquire a natural fancy colored diamond like a 1 carat vivid yellow that you could get in the 50,000 range right now, where you're looking at well under 100, probably under 80. And if you look at the type of quality that we're offering, you're probably under 30 of 1 carat vivid, internally flawless diamonds of any shape.
What is the closest diamond that Guildhall has? What would be the Guildhall hero diamond that you could talk about?
Well, we do have a tender diamond, a beautiful, it's a deep pink. It looks like a Beaujolais color. We've seen that increase dramatically. It's at a point where you can't let it go. I mean, what are we going to replace it with? We also have a vivid pink diamond that's about 0.75. Again,
wow.
that diamond is close to $1 million. It's close to $1 million. And again, what do you replace it with? Mm-hmm. What are you going to replace it with? And so these become family jewels for yourself that you could pass on through generation to generation. The difference is it's sentimental value. It's actual value.
Right.
And that's the type of thing you want to hold for generations, or something to give to the next generation.
It's both.
And a way to easily have the next generation be the custodian of the wealth and protect it.
Love it.
The number 18778 silver, the website guildhallwealth.com. Please visit the website, check out some of the natural fancy colored diamonds that we offer, and of course you can book an appointment and we can show you how and the process that we go through to acquire these diamonds, because we only sell diamonds that we have personally invested in. We don't sell other people's diamonds. We sell out of the Guildhall collection that we have curated. The number again, 18778 silver, the website, guildhallwealth.com. More to come on The Real Money Show. And by the way, we're going to be talking about Powell's take and his view of the company he works for. You really want to stay tuned for that. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver, the website, guildhallwealth.com. This is the serious moment of the show where we have to start talking really fast because we always find we run out of time. Right, Jerry?
So true.
Let's talk about the Federal Reserve, talk about interest rates, talk about the effects of everything. But first, Chairman Powell was testifying his second day. Congressmen were asking him questions. And you grabbed this clip because it's very telling. Let's listen to the clip and then tell the audience the significance of what we just heard. Okay, here's the clip.
So eliminating the Federal Reserve is best for promoting economic stability.
Yes.
Thank you.
And he ends it right there. Thank you. I'll end my speech.
Okay.
Play it over again?
No. Tell us what just happened, Jerry.
Okay. So it's his second day of his testimony. The first day, obviously, he's on script. You stick to the script. He didn't back down from it. He basically talked about they're fighting inflation with economic growth, blah, 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 and they may have to cut interest rates. And then he was asked, after questioning the Federal Reserve's efficacy of keeping jobs up and fighting inflation, there was a question by a senator. He questioned by saying, so eliminating the Federal Reserve is best for promoting economic stability? Should we end the Fed? And Jay Powell, who is the chairman of the Federal Reserve, says yes. Yes, you can go ahead and end the Federal Reserve. It was a big sign, Jeremy.
Very big sign. So even the chairman himself, maybe he didn't understand the question, but let's assume he did. He said that eliminating the Fed would be the best thing for economic activity.
Ending whatever's going on in the inside, maybe restructuring, and perhaps I think we're moving in that direction. I think we can all agree the Federal Reserve will be restructured.
Okay, let's talk about interest rates.
So interest rates, there is a very huge possibility of over 80% now coming up a September rate cut. This is because of the cooling inflation narrative that we're seeing. So inflation is dropping. They were expecting 3.3%. That's dropping. And then the Fed Powell is signaling a Fed pivot. We're going to see job market concerns adding up. It's going to prompt rate cuts. So that's causing the gold and silver to spike higher. This is why we're up on the week. Silver so far is up 3% on the week. Gold the same over the year. Gold's up 17%. Silver's up 32% on the year. So we're back on the front foot. Gold and silver are going to be ratcheting a lot higher. Not so much for stock markets. But last week we talked about the hidden dangers of rate cuts. Further, there's more articles coming out that every time that the Federal Reserve cuts interest rates going back to 1929, there was a stock market tumble, a crash of so to speak. 1929, down 80%. In 2000, down 40%. We don't have the time to recover that, Jeremy. We want to make a move now and preserve what we have in the portfolio and get into something that is going to rocket higher during rate cuts. What could that be? Let's look at silver. Silver returned an average of 332% in the last three Fed rate cutting cycles. You heard that first. 332% every time the Federal Reserve cuts interest rates. Why is that? Because when you cut interest rates, gold and silver, which move in the opposite direction of the falling US dollar, moves up in price, moves up in value, and guess what? The world wakes up to more, they're more attentive to the silver and gold markets. They're attracted to it and more participation. This market is going to break even higher. We're going to break records, Jeremy.
So gold and silver have a proven track record in a falling interest rate cycle that they move higher. We already know other reasons why they're moving higher, like central bank demand, people looking for ways to secure their wealth, to hedge against inflation, these sorts of things. So we already know that there's a proven track record here, but it's not just these things. There's other aspects that are going to be pushing the price even higher. You had something here by one of a silver market analyst, Peter Krauth, right?
Yeah. Yeah, he points out the returns of the silver market. So he was the one that came out with the data that shows silver moving up 3 times after rate cut cycles.
So
what could that do for your portfolio? Let's multiply that number by 3.
Yeah, that's the point here. That is it worth looking into and just even having an open mind to say, maybe I should diversify just a little bit here. Maybe you have a lot of profits that you've been getting in the stock market, getting in other places. Maybe it's time to turn some of those profits to these areas where it's actual real assets that, of all of the things that we've discussed, reasons to hold. Maybe you're not getting the type of returns that you really need to be looking at, and you want to look for something that is truly undervalued. And when you look at the debts out there, when you look at the demand, when you look at the mining capacity and the fact that it's wavering in the precious metals market. If you look at the demand going forward in silver, whether it's computers, AI, I mean, you're going to need massive processing power. What do you think goes into all those computers? If you're going to have EV vehicles everywhere, what do you think goes into those things? What about the military? What do you think is made in all of these technologies? If you think the world is going to progress, then you need silver. If you think there's going to be a financial crisis, you need gold and silver. If you think inflation is going to continue to be a problem and that it could get worse before it gets better, and that's what happened in the 70s, you need physical assets to protect. If it's not nailed down, if it can't be printed, it's your friend. So we think gold and silver are only going to move higher from here. We've got projections of 7, 8. We've got projections up to 27,000. That's a lot talk. Conservatively, gold could easily go to 7,000 over the next 4 or 5 years, and that could put silver as high as $200. So give us a call. We'll show you the numbers. We'll show you why we arrive at those numbers and what it could look like in your portfolio, what the costs are, how to get in and out of the market, how to store it. What do you want to do how to handle it if you decide you want to take it home? Jerry, a few moments.
Listen, we need gold and silver right now. U.S. bankruptcies hit the highest level in 14 years. China's banking sector is falling apart. Another bank went under this week, further escalating the crisis. That's 40 institutions vanished recently. 36 were just gobbled up. So there's mergers and acquisitions. The financial rumblings will continue, and your physical gold and silver cannot go bankrupt. And they cannot default on false promises or obligations in paper, stocks, or ETFs. The time for physical precious metals is now, and we want you to give us a call here at Guildhall Wealth. Thanks for tuning in.
If you've missed a show, check us out on YouTube, check us out on Rumble, on Spotify. All of the news we've been gathering for the show, we put up onto our X feed, so you can be first to know what's going on at Guildhall. We want to thank everyone for joining us. Hopefully you've been enjoying the sun and saying, man, these guys rock. They're making my beer taste better. The number, 18778-SILVER, the website, guildhallwealth.com. Can't wait to speak to you all next week here on The Real Money Show on 640 Toronto.